Welcome to the GST deep dive. Imagine your government announces this massive tax cut, right? Like to make your healthcare cheaper and more affordable.
Right? Highly relevant and financially attractive, especially if you're a retiree on a fixed income.
But then you get your bill and your taxes haven't dropped a single cent. And to make matters worse, your former employer might actually be quietly pocketing your tax break.
Yeah, it's a completely untenable situation when you look closely at it.
Welcome to today's deep dive. I'm Nisha Bhattacharya and my co-host is Priyanka Chakraborty. We are unpacking a pretty dense stack of sources today. We've got bank union circulars from the AIBRF, legal updates from Kerala, and so forth.
Right? And our mission here is really to figure out how a well-intentioned tax cut, meant for everyday citizens accidentally trapped over 700,000 senior citizens in this just incredibly frustrating bureaucratic loophole.
Yeah, let's unpack this. So, back in September 2025, the GST Council in India made what looked like a hugely popular move on health insurance. It was of particular interest to retirees that pour so much of their meager pensions into the rising cost of simply staying healthy.
Exactly. They dropped the 18% GST, the goods and services tax on individual health policies down to zero. Nada.
Which on paper sounds amazing, zero tax.
It was designed to make healthcare more affordable, but the technicalities created this hard line. Retired bank employees who were covered under the Indian Banks Association policy, the IBA, they were entirely excluded from this relief.
Wait, completely excluded? Why?
The government's reasoning was that their policy is legally classified as a group policy. GST was aimed at the individual consumer or retirees and not a group of subscribers.
Okay, wait, I have to stop you there because if the retirees are paying the premium entirely out of their own pockets, how does that work? Like, what does the financial toll actually look like for a retiree's wallet here?
Well, to give you a sense of the scale, a standard policy covering a retiree's whole family costs about 40,900 rupees a year.
Okay.
And at 18%, a staggering 6,239 rupees of that premium is just the GST.
Oh, wow. So, for a lot of these seniors, that tax bill alone is probably equal to or even more than their entire monthly pension.
Exactly. I mean, just a few years ago, their total premium was around 7,000 rupees. Now, that is just what they pay in tax,
That is insane. It's like, well, think of it like a restaurant offering a kids eat free promo,
right?
but then denying it to a child simply because they happen to be seated at a large group table full of children.
That is a perfect way to put it. The administrative umbrella dictates the rules, even if the financial impact is entirely on the individual.
If you're enjoying this podcast, you can support the Bloggerian without spending a single paisa.
It costs nothing to subscribe, like, comment, and share this podcast on social media. Thank you.
But I mean, contract law aside, if the money is literally being drafted out of a retiree's personal checking account, how can any court look at that and say, the bank is the one making the purchase? Surely they fought this.
Oh, they did. They took it straight to the Kerala High Court.
Okay, and what happened?
Well, at first in October 2025, they actually won an interim stay. So, like a temporary pause allowing some of the policy renewals to go through without the GST being levied.
Nice, so a temporary win.
Right? But by January 2026, the court officially struck the petition down.
Wait, really? Why?
The ruling basically came down to the fact that the IB acted as an intermediary. Because they secured better rates through collective bargaining, the policy is legally a group contract.
Oh, I see.
Yeah, and that legal definition fundamentally disqualifies the retirees from individual tax relief. It just doesn't matter who actually remits the funds.
Okay, here's where it gets really interesting to me. Is it actually fair that securing a volume discount for vulnerable seniors disqualifies them from a tax break, like a break intended to ease individual healthcare burdens in the first place?
It really highlights this huge gap between the spirit of the relief law and the strict, unyielding letter of the law.
Right. So the court says the bank effectively owns the group policy. But if the bank legally owns it, do they get the tax perks that come with it, even though the retirees are the ones paying the premiums?
Yes, and this is where the mechanics of the tax code create a massive blind spot because in the GST system, businesses can claim an input tax credit.
Which is essentially a refund on taxes paid for business expenses, right?
Exactly. And the Retiree Federation pointed out that because the bank is technically the policyholder in this group setup, the tax code treats the retirees' premiums as a business expense for the bank.
Wait a second, wait. The banks are collecting the 18% tax from the retiree's pocket and then turning around and claiming a refund from the government on that exact same money without refunding it down the line to retirees?
Pretty much. The mechanism allows them to claim up to 50% of it back as a credit.
That's incredible.
Yeah, the Federation estimates this could amount to around 158 crores over 4 years. Now, the banks haven't publicly disclosed exactly how much they've claimed.
Sure.
But the corporate group structure legally permits the middleman, the employer, to weaponize the administrative setup for tax rebates.
Listen, this isn't just an issue for Indian bank retirees. Why should you, the listener, care? Because it's a cautionary tale for anyone who gets their insurance or perks through a corporate employer.
Absolutely, we always just assume employer sponsored group discounts are doing us a massive favor.
Right? But what looks like a subsidized perk can actually hide complex tax implications. Structural tax traps can completely wipe out the actual savings you think you're getting.
Yeah, when arbitrary administrative structures dictate tax policy, it is almost always the end user who quietly pays the price.
Exactly. So, to wrap this up, what does this all mean for you?
Well, it means you have to look past the surface level of these corporate benefits.
Okay, I'm going to play devil's advocate here. What is the difference in healthcare insurance premium between group and individual premiums? Could group premiums offer such significant savings over individual premiums that retirees are on the whole better off?
Fair point, Baiki. And ultimately, that's the math retirees and their union will have to confront for themselves.
Finally, if an arbitrary administrative label like group versus individual can dictate your financial burden so heavily, how many other everyday perks might actually be quietly taxing you out of pocket without you even realizing it?
Definitely something to look closely at the next time you sign up for a corporate discount.
For sure. Thanks for joining us on this deep dive. We'll catch you on our next one.
Please subscribe, like, comment, and share on Facebook and other social media platforms.